Good afternoon, ladies and gentlemen. Thank you for the opportunity to present our little company to you. I have the top team, the Champions League team with us today. Pippa is going to do the main bulk of the presentation. She's our marketing and sales director. Paul's our managing director, previously our finance director. Nick is our export, and Sally is our contracts and private label. We're a manufacturer and brand owner in the personal care, beauty, fine fragrance, home fragrance products. We're probably unique in that we span quite a lot of areas. We actually can produce and manufacture in each one of those. We've got brands in each one. And we also have acquired a company recently which gives us entree into the soap, hard bar soap and candle and home fragrance manufacturing. So we're kind of unique and different to any other company in the UK. So 15 years ago, we started out with this team, really. Small manufacturer, reliant on dominant customer body shop, who took their business in-house and left the company in a bit of a mess. So we purchased in 2003 Potter&Moore, much larger manufacturer, and still our operating name. We operate under the name Potter&Moore Innovations Limited. Skilled team, direct retail contacts. So over the last few years, our turnover growth has gone from 5 million to 15 million. In the last 6 months, we did 15 million. So that's quite good in relation to the previous year, which was 15 million in total. We reversed, over that period, reversed losses and created profits of 1.3 million. Increased market presence from 1,500 stores to 15,000 stores globally. We're in every shop from Poundland to Harrods, everywhere in between, Tesco, Asda, Boots, Superdrug, with both private label. We'll explain private label a little more later, but we're in there with private label and branded product. We've moved from UK to Australia, probably 30 to 40 countries, which we trade with. Probably 10% of our total turnover now is export. We have a presence in most of the major countries. And as I said before, we do everything from talc to fine fragrance. We've got those production facilities as well as the chemists to facilitate development of the products in those areas. So Creightons hair care, for example, has now achieved 2.7% of the UK market. So we compete fairly favourably with the likes of L'Oreal, Schwarzkopf, any of the one that you care to mention. The Creightons brand is sought after by discount channel. I mean, the Creightons corporate brand, Home Bargains, would like us to put Creightons on the product, regardless of whether it's skin care, hair care, tanning, because they feel the brand has got a recognition and a quality that is better than most other manufacturers and as good as any other brands. We benchmark our value products against the like of John Frieda in the hair care, which is top of the range, and we do that successfully. The people that find you out are the discounters. If you don't do a really good product, even though you sell it at £1 or £1.50, they won't be back again unless they're satisfied. Contract manufacturing ranges from boots to exclusive and premium fine fragrance brands. We have indeed an enviable record in private label with all key retailers. For me, the big asset in our company is the management team. They're tremendous. They've been together for quite a few years. We started back 10 years ago. We've done all this as a team. We've learned as we went along, and I think we're in a position now to drive forward very, very successfully. We make it a priority to expand and duplicate and train those who are coming with us and behind us. We're consumer and customer driven. Our culture is aspirational, visionary. We do worship at the altar of quality, service and innovation. So with that, I'm going to hand you over to Pippa, who knows how it's all done and will inspire you, hopefully.
Thank you, Bernard. Afternoon, everybody. Thank you very much for coming today. So just before I take you through a bit more detail about how we do what we do and the kind of business that we do, I thought it would be good to give you an overview of the markets in which we operate, both here in the UK and internationally, just to give you a feel for our environment. So the beauty industry in the UK is worth about £17 billion. The retail element of that, which is the product side of things, is about 7.1 billion. and it's predicted to be 10 billion by 2018. So it's growing at quite a considerable rate. The consumer, particularly in the UK market, is definitely looking for quality and value. It's one of the key things that has definitely evolved since 2008 in the market in the UK. We have a very savvy consumer. They do like to shop in the discount channel. They do like to shop in mass retail, and they're always looking for good quality. What is appealing of this category to most retailers in the UK, grocers particularly, but also now moving very rapidly into fashion retailers, is that it's a high margin return product for retailers. So compared to food and grocery, for example, compared to clothing and fashion retailers, this is a very sexy category for a lot of retailers. So key drivers in the UK market is the value channel. Skincare and hair care are key growth categories, and hopefully you'll see how I've threaded that through into what we do later on in the presentation. Private label dominates the UK market. Obviously brand does, but we are very unique globally. We have the most sophisticated private label category in health and beauty in the world. About 42% of what happens in the UK market in terms of sales is through private label, hence the dominance of our retailers in that area. And the power of the grey pound is obviously becoming quite dominant in terms of the sector in the UK. Internationally, a 220 billion beauty industry worldwide, 5% growth by 2018 globally. Exports in the sector are growing by 5% each year, so that's from the UK into export markets, and emerging markets see this as an accessible luxury. So very important in terms of our growth and development, but also in terms of the beauty industry for the UK. The UK still seems to hold a very high USP in terms of British manufacture when it comes to beauty products and toiletry products. I think there's definitely a demand for British beauty. There's a provenance that comes with UK manufacturing. Definitely in terms of what's happened with the dollar and what's happened with currencies around the world, British manufacturing seems to be benefiting from that in terms of our attraction in terms of design and development. Again, skincare and hair care globally are big growth categories. Asia Pacific and Latin America are very key markets in terms of growth and development. And again, it's an accessible luxury for developing markets, so it's a very interesting development category around the world. I've also then just done a split for you in terms of how the market is currently broken up. So skincare, hair care, colour cosmetics, personal care and fragrance. We play in all of those categories apart from colour cosmetics. I then wanted to define for you, there are three key channels to our business: our own brands, private label and contract manufacturing. And I thought it might be beneficial just to give some definitions on that for you. So in terms of our brands, we very much pride ourselves in operating in the value sector, the mass sector, in terms of high street and grocers, but also in export, and very shortly moving into the premium sector as well. It's a very trend consumer led division category. We have our own in-house design and creative teams, so we're designing and pushing new products out to the market all the time. It's quite fast moving. So speed to market is key in this area as well of brand. One of the areas that we've recently moved into in terms of brands is also licensing. That came along with the acquisition that we did this time last year, which is about a year from, exactly a year ago. Is we also developed two licenses that came out of that business. So we've now moved into licensed brands as well. So that's also enhanced our branded division. Private label, slightly different animal insofar as that you're developing product for the key retailers under their own brand name. They look for superior technical ability and service performance. That's really what we're graded on all the time. Speed to market is still very important, but servicing these customers with their product, keeping them in stock, managing their forecasts, overseeing their EPOS in terms of what's going through the tills, knowing what's coming next is very important for these key customers. And obviously you can see a selection of customers that we work for in private label. It's an interesting dynamic insofar as that we have to stock hold for them and we do manage their forecasts. So I think a lot of people do believe that when you're doing private label for retailers that they buy in contract volume. They don't. You actually manage the business for them. So not only do you manage the stocking and the forecasting, you also manage their brands as brands. A good example of that is we do the Little Angels brand for Asda, which is a baby brand. It's the second largest baby brand in the UK after J&J. So it's managed as a brand. So we have a brand plan for it. We manage marketing for them. So whilst it's a private label supply, it brings all those dynamics in of brand management. I'm not sure a lot of people quite appreciate the extent to which you have to manage private label. So you're not just making stock, you're managing it as a brand. It can vary in volume quite significantly from 10,000 units a year to 500,000 units a year, depending on what you're doing. So some high-end skincare lines we do for Superdrug, maybe 10 to 15,000 units a year, and then you get into things like baby and personal care where you can do much higher volumes. And then contract manufacturing, which is our third division and our third string, if you like, where we manufacture for other brands. And this can vary dramatically in terms of the types of products that we do. So we're doing high-end skincare for someone like Ren. With the acquisition that we did last year, we now, as Bernard highlighted, have the ability to do high-end fine fragrance. So we're manufacturing for people like Floris, Clive Christian, Molton Brown, some really lovely brands. But we're doing anything from bath and body products for Champneys for boots, for example, Grace Cole, which is a brand you may know that have done very well globally, good British brand, and Truefit and Hill in the high-end male grooming sector. So quite a diverse group of customers, which can be quite high volume, but can also be very small volume with some of the premium customers that we work for. One of the advantages of contract manufacturing is you do get a 3 to 4 month order book, which is quite nice in terms of placing orders with us. One of the things that I think we stand out at in contract manufacturing that makes us attractive to these kind of customers is that we do excel at managing and helping manage their brands from a supply point of view, which I think comes from our experience that we have in private label direct to retail, so we understand the retailer dynamic, and also managing our own brands. If you look at other contract manufacturers, you'll find they're mainly just fillers. We have that added value aspect to our business where we understand the challenges that they're up against with regard to retail, global expansion, or whatever it is that they may be doing. So these brands, for example, we give them quite a lot of technical support on their global export business as well in terms of technical documentation. So it's an additional aspect to our business. So I thought it would be interesting also just to outline for you in those three divisions the type of competitors we're up against. So private label, we can be up against anybody like McBride's in personal care, which is obviously quite a big dominant player in the industry, albeit predominantly in household. They do play in personal care. Anybody from Royal Saunders to Mabel, Fleet Labs. Contract manufacturing actually brings a much more diverse group. So we can be up against, a rather large business like Swallowfield in contract manufacturing, but then down to someone like Wolds of Lincolnshire. They're a very small fine fragrance manufacturer and doing some high-end fine fragrance manufacturing, through to Premco, who do bar soaps, through to contract candles on the candle side of the business. So a very diverse set of competitors in contract manufacturing. And branded, we're pretty much up against anybody that's in personal care, hair care, skin care, male grooming that's in the market at the moment. And that can be smaller marketing companies like Brand Architects that do a very good job with exclusive brand with people like Boots and Superdrug, through to the Cussons and Unilevers and L'Oreal's. So our brands are now sitting in the likes of Tesco's and Morrison's and Asda, and we're sitting on fixture with Ultimate Blends Garnier. We're sitting on fixture with L'Oreal. We're sitting next to John Frieda. So they are as much our competitors now in terms of where we sell our product, as well as the other ones that are doing exclusive brand. So just a bit more about who are Creightons. There was just some kind of facts and figures about who we are. So as Bernard's introduced, we're a developer and manufacturer. So we do everything from trend analysis and design through to the manufacture and the marketing of the product. We own brands, we create them, and we also incubate them. That's how we define ourselves. Very diverse customer base, as I've highlighted already. Head offices in Peterborough, Cambridgeshire, where we also have manufacturing. But we also now have a manufacturing site down in Tiverton in Devon, which is where we've acquired the abilities to do, as I've highlighted, high-end skincare, high-end fragrance, candles, bar soap, reed diffusers, and other home fragrance products. So it's really extended our capabilities in terms of the types of products that we can do. I think what's very interesting about that is when we did purchase that business, we had two customers in common, and that was the White Company and Boots. And both of those customers were very welcoming of us extending our capabilities to be able to help service more needs that they have in terms of different categories. There's 340 of us now across the two sites. And the thing that is very important to us, which I'll highlight in a little bit, is award-winning products. We're very proud of our products, and we do win lots of awards, so I'll talk you through that in a minute. And just to highlight the mantra that if you spoke to anybody, any of those 340 employees, quality, service, innovation, it's what we live and breathe, it's what we're about, it's what we do. So a little bit trading history for you, for those that aren't familiar with Potter&Moore and Creightons. Creightons purchased Potter&Moore back in 2003. We then were dominated really by one big customer, and that was Body Shop and Tesco as well in terms of grocery. So we started investing quite heavily in terms of making sure that we were expanding into different types of customers and different product categories. We were a very gift-based business then. We were doing a lot of private label gifting and mainly just bath and body. So we really set on a journey of going into other categories, becoming experts in other categories by employing chemists that were skilled in skincare, in self-tan or male grooming, and to diversify both our customer base and categories. 2008, we made a concerted decision to go into the discount channel in the UK. They really did make a breakthrough in 2008, and the likes of Home Bargains and Poundland and Pound World and all those good guys on the high street really started to dominate what was happening in our category. We still have a very successful trading relationship with all of them, but that was an interesting turn for us. And that was really the beginning of our journey of Creightons, putting Creightons brand onto the products and taking Creightons brand, as Bernard alluded to, into the discount channel. What's very exciting for me is we've now evolved the Creightons brand into the multiples. So you'll see us in Tesco, you'll see us in Asda, you'll see us in Morrison's. So we've expanded beyond the discount channel also into the multiple category and export, which we'll get into in a minute. Invested quite a lot in brand development over that time period. We then sold our share. We had an ethnic hair care brand that we traded in the UK and the US for many years. We sold our share of it in 2014. We then sold the Real Shaving Company, which was a male grooming brand we had here in the UK, Canada, and a number of countries around the world in 2015. And then, as we've mentioned already, we acquired the assets of Broadoak Toiletries exactly a year ago this month. So just a plotted history in terms of where we've been. So how do we deliver? The big word that we use now when we present to our customers and present to our markets is actually we see ourselves as a solution provider. We don't just see ourselves as a manufacturer, not just a brand owner. We see ourselves as providing solutions to retail, regardless of what that retailer is, whether that's a Boots, a Superdrug, a grocer, a Primark, whomever it might be. Insofar as that, we have the ability to do exclusive brand. We have the ability to do our own brands. We can contract manufacture for them, or we can do private label brand for them. And actually, Primark's a really good example. You'll see our brand in Primark, but you'll also see that we're doing private label for Primark, which makes for a really nice partnership in terms of how we're evolving and developing. Because at the end of the day, all the retailer is looking for is some sort of solution. And sometimes private label is a very big priority for them in terms of their strategic goals. We can do that. And sometimes brand is important. So we can ride the wave regardless of what the trend is in terms of taking advantage of all of those opportunities. So I already talked about our 3 business channels, talked about our diverse customer base. The other thing I think that is definitely a USP for us is our category expertise. We do operate in 10 personal care categories, and then recently added fine fragrance and home fragrance to that. Our supply base and buying power are obviously very important in all of that. Multiple sources around the world for all of our componentry and raw materials, it's very important. And also having backup sources for those sources as well. Volume trade, if you look at something like our Creightons brand, in hair care, we're now trading something like 7 million units of hair care through the UK, so that gives us quite strong buying power in terms of the tubes that we buy, which gives us great pricing. And source risk management, which actually goes back to that point about having multiple sources and backup sources for some of our key components and raw materials. Flexible manufacturing facilities, definitely an advantage that our customers see, both here in the UK and globally. We can do low to high volume runs. The site in Tiverton has given us even more flexibility in terms of what kind of volumes we can do, which is very exciting. We do a very wide range of formulations. Again, that goes back to the amount of categories that we operate in, but it can be anything from facial skincare, body skincare, male grooming, male skincare, self-tan, bath and body, fragrance, you name it in the beauty industry, we can do the formulations. And we have a very diverse set of packaging that we can do as well, and that's kind of coupled with our ability on flexible manufacturing. If you walk into a McBride's, you'll see that they're pretty much pushing through the same kind of bottles for the same kind of customers. The complete opposite is in our situation where we've got lots of standard bottles that we can buy. We do lots of different applications to those bottles, and we can mix up what we do. So we do anything from jars to glass to tubes to litre bottles to small bottles, whatever it might be. And that again is a very attractive feature that we have in our markets. And then our R&D expertise, first time on time is very important for all of our businesses, for our brands, but also for those dynamics I've explained before on private label and our contract customers too. And a robust MPD delivery process, I think that's very important. Critical path management is a big thing that you'll hear in our business. And that's about getting product to market quickly. It's about getting product to market with very low risk, and is making sure that we deliver on time to our customers and meet the demands that they have. So we thought it would be useful to also show you where we've gone in terms of our journey from when Creightons purchased Potter&Moore back in 2003 and 4 and where we are now, just to give you some dynamics. So we had 3 brands, 25 SKUs back then, now 10 brands with 120 SKUs. We had 1 dominant private label customer, we now have 9 in our portfolio. We had 2 value sector customers on board then, we now have more than 20. 2 multiple sector branded customers, which was Boots at the time. And now we have 8, so we're trading our brand in 8 multiple customers here in the UK. 10 contract customers, we now have 30 plus. We weren't in any export markets then, we're now in 30. So it just shows you the journey that we've been on in terms of diversifying our business. Again, wanted to give you some visibility in terms of how our business is broken down in terms of the 3 categories over that time period. So private label and contract very much dominating the business back in 2003. And as you can see, that balance has changed at the end of 2015-16. This changed again in the past 6 months because of our acquisition down in Tiverton. That is a contract business. So you can see that now 46% of what we're doing currently is contract because that business has bought quite, well, it's all contract business it's been bought with that acquisition. Again, in terms of customer mix, you'll see the dominance of Tesco in our business back in 2003, which was quite significant, and how that's evolved in 2015-16 into brands, but also bringing in other customers like Superdrug and Asda, and then again diversifying even further. Someone like Wren now being 8% of our business as a contract customer. So still private label customers, Superdrug up at 10%, still a very important business. Wren obviously has gone in there, Body Shop is still there, and obviously Boots is now featuring as well as a contract customer, which is quite exciting. And you'll see the dynamic that's happening there with brands in terms of our export piece as well, in terms of how that has evolved. Category mix, so again going back to the point about how many categories we operate in, it was pretty much just 4 categories back in 2003, dominated by bath and body and gifting. With the investment we made in people, that we made in R&D, that we made in the technologies in terms of manufacturing, diversified into quite a lot of different categories and continue to do that. What's very exciting, I think, is we now have quite a big skincare portfolio. So we do basic pound skincare for someone like Tesco. We do also high-end skincare for something like Bamford. So the scale of what we can do is quite significant. So we do organic skincare and we do the basic stuff as well. It's a growth category, as you saw in the dynamics that I showed you earlier. Skincare is a really big dominant category in the beauty industry, as is hair care. And you can see how well we're doing currently in those 2 categories. Quality. So I'm now going to talk a bit about our mantra, quality, innovation and service. So going back to the awards that I mentioned earlier, we're big award winners. We love awards. Whether that's product awards. In fact, we've just been shortlisted just this week for 5 awards in the Beauty Awards this year. And that's all of our brands. So that's the Curl Company, which is a hair care brand, Ami, which is a skincare brand, and some of our Creightons hair care. So we're very excited. I think they announced the awards in about 2 months. So hopefully some more to add to the list. But as you can see, not only do we win consumer awards, so the beauty awards are consumer voted, for example, we also win a lot of awards with our customers. So Tesco, we manufacture their baby range. They win the Mother and Baby Award for their baby range, same with Asda. And that's through the innovation and the manufacturing that we're doing for them. Just wanted to give you an insight as to some customer feedback and how our customers love our products. And this is, we must get somewhere between 20 to 50 comments every single week on our brands coming through our websites of people commenting on our brands. We just took a selection of them for you just so you can see how people like our products. Innovation, very important in our category. Our category is very fast moving. It's very innovation driven. It's very trend driven. It's very fashion driven. So we need to be on it all the time in terms of innovating. There's some key things we've done over the years that we think have definitely added value to our business. We were the first to the market with Real Shave, with the 3-step male grooming process. So pre-shave, shave and post-shave. We were the first to market with St James of London, which was an all-natural male grooming brand. Nobody had really done naturally male grooming before. And more recently, in just the past 18 months, we're the first to market with a Curls and Waves dedicated range in mass market, which is our latest brand that we're promoting and selling. So service, again, awards from our customers. So I mentioned earlier, in the private label world and the contract world, servicing your customers and looking after them and make sure they're in stock and they've got quality product is very important. So you'll see the sort of types of awards that we've been winning with customers. Best supplier inbound, best own brand cost management, doing the right thing first time from Asda, best health and beauty supplier. It's very important that we get these recognitions with our customers in terms of keeping up our service levels. So now I just did some visuals for you so you could see our products in market. I thought that would be quite helpful. So these are the two licensed brands that we've recently gone into over the past 12 months. Emma Bridgewater, a license with, it's a brand you may be familiar with. She's a top ceramicist here in the UK, and she's licensed her products into toiletries. We've also moved into cosmetic bags and home fragrance. We recently relaunched in October, just before Christmas, into Marks and Spencer's, onto a full fixture into their 77 beauty stores. On the run up to Christmas, in the 25 brands that they had in Marks and Spencer's, Emma Bridgewater was the 5th best performing. So we're really pleased with that. We're up against people like Ren, L'Occitane, and very Bliss, other kind of well-known brands that you will know. It did very, very well. Kate Humble might be a personality that you're familiar with. She's a complete eco-warrior. A range that's been developed that is eco-sustainable. All of that packaging is recycled and recyclable, and the formulations are biodegradable. I think that definitely is the future of naturals. People talk a lot about organics. It's not very good if it's organic and you should fly it in from Brazil, and it's adding air miles to everything. Kate is about, you know, the environment and having something that is inert and has an inert effect on the environment. We're very excited about it because I think it is the future of naturals. Currently got that listed in Waitrose here in the UK and is doing very well, so we're very excited about that brand. And then just to give you, it kind of just shows the breadth of where we are in the UK. So anything from Dobbies in a garden centre with our bath and body range ingredients, and I absolutely love that display that they've given us, it's delicious, to Morrison's with our hair care, to Wilkinson's with our hair care, to we have a bath and body brand in Superdrug called Café de Bain. The Curl Company in Boots, as I outlined earlier, is one of our brands that we've developed over the past 18 months. And then our international market. So Nick very kindly has done an update for me in terms of where we are globally. So where we are coloured in blue is where we are currently trading. Our top market, interestingly, is in terms of shipments, is Chile, which was a little unexpected. But I think Chile is an example. We're listed with Fasca, that are owned by the Walgreens Boots Alliance. So they're quite a sophisticated retailer in terms of their presentation. They're an excellent retailer, look after our brands beautifully. I think that is a demonstration in Chile of how British brands and the Britishness is definitely revered in a market. We've recently moved into Peru as well, which is a very similar market to Chile, and it's a very similar dynamic in terms of wanting British brands. So that's an interesting one for us. Some obvious ones on there like Australia and South Africa, which you would probably expect to see. And then you'll see where we currently have live negotiations in yellow. We've highlighted where we're going. So yeah, doing quite well. Hopefully it might be filled in a little bit more by this time next year. Just wanted to give you an idea of the retailers we're with. So again, recognised multiple retailers all over the world, from someone like Clicks in South Africa, Priceline in Australia, Gratis in Turkey, again, very exciting retailer. Rossmann in Poland, and we're also going into Rossmann in the Czech Republic. That was a recent listing that Nick and his team have managed to secure. To Hebe in Poland. So from Eastern Europe to South America to Australia to South Africa. Mustn't forget Carrefour, because that's a key one too. And again, just wanted to give some visuals in the different countries in terms of what our product looks like. So our hair care, and we also have our facial skincare brand Ami. They're both in Priceline in Australia. Love that Ami display, 2 shelves, that's lovely. Don't want Nick had to pay for that, but it's great presents. Turkey, Gratis are like a Superdrug. They're a very young, vibrant drugstore type retailer. They look after our brands very well. So you can see the kind of advertising that they do with our brands. South Africa, so these are examples of Dischem and Clicks. So 2 shelves just above Lee Stafford, which is quite nice because Lee Stafford is a very dominant brand in boots, if you're familiar with this category at all. So to get 2 shelves above Lee Stafford is quite a coup. And then sitting with brands like OGX, which obviously you may have heard of, they recently sold out to J&J for quite a lot of money, sitting in Dischem. Chile, some examples of hair care and the kind of banners that they do at front of store with our brand. Peru, that's a recent launch with our, again, and you can see the kind of advertising that they do on our brands. So again, back to the point, the Creightons corporate brand in our branding is getting quite a lot of attention. So you can see the British flag that they use at the top and the Made in England. Poland, Russia, new market for us in the past 12 months, which has been quite exciting. We've actually replaced John Frieda in terms of space. John Frieda's retracted their distributor network. That left a gap for us in Russia, which has been very exciting. Morocco with Carrefour, we have a separate freestanding unit, as you can see, Creightons brand here on the left-hand side, and recently launched our Ami brand into Carrefour in Morocco. Denmark, this is an interesting development over the past few months. A retailer called Normal, Denmark is developing quite a sophisticated discount channel as well. Very impressed with the way they merchandise products and the way they're merchandising our brand, as you can see. And I'll now hand you over to Paul, who's going to talk you through some financials. I'm sure there'll be lots of questions at the end.
Thank you, Pippa. Hello, everyone. What I'm going to do is I've got a few slides here, just concentrating on the top line and on the last 5 years, just to give you a bit of a feel for what we've done over those. And starting off with revenue, I've bullet pointed there that we're looking at 5 years of underlying growth. And it doesn't look like that in the last year. It looks like 21 million. But I think the key point there is that the underlying phrase, where we're looking at Real Shave, when we sold that brand in 2016, the previous year, or 2015, sorry, but in the March 2016 results, the previous year we sold sales of 1.2 million for that brand. Pippa talked earlier about the Twisted Sister brand that we sold the year before. Again, that was £900,000 worth of sales. So within that, the underlying sales have continued to grow every year, but we've seen, we have moved out of certain parts of that market. So on that graph, we're looking at from 2012 to 2016. There's been a 29% growth in sales over that period. But if we added back those two sales figures, we're looking at 42% is the underlying growth in sales over that period. So it's a significant figure that's continuing to grow. We're then looking at the results to September 2015. And there we're looking at sales in that 6 months of 15.6 million. That compares to where we were in 2012 of 16 million. So we're almost doing now, achieving sales equivalent in 6 months to what we achieved a year, 5 years ago. About 8% of that growth, the previous September, the sales were 10.7 million. 8% of that growth is organic. It's come from the old business, if I can call it that, the business pre the acquisition of the Broadoak assets. And the balance of that has been picking up and taking the business that we acquired from the administrators, getting those customers back on board, building relationships with them, and Pippa talked about the relationships with Boots, that we were able to leverage our relationships to bring those people back on board quickly. So a significant increase there in that last 6 months has been getting that business on board. Looking at the profits, again, what I've tried to do, and I'll talk about the profits first, which is the blue bit on that graph. Again, we've got 5 years of underlying profit growth, and that's excluding the exceptional items from the sales. So even though we've sold parts of our business, parts of our branded business, we've made significant profits on the sales of those bits of business, we've still managed to grow the profit on the underlying business. We're looking at sort of £223,000 profit in 2012. By the year ended March 16, the profit's 561, the underlying profit. By the time we get to September 2016, we're looking at an underlying profit of 671 in the 6 months. And that's the post-tax profit, the retained profit for the company. And part of that is obviously you're buying a business, you don't necessarily take on all of those overheads. There's a lot of centralised overheads now. The finance, the purchasing, the planning are all centralised within the organisation. So we haven't had to replace the full level of costs and structure that was there in the business that we acquired. So there's a lot of synergy come through in that 6 month period. And it's probably come, I think, even to ourselves quicker than we would have anticipated. Within that figure, you've got on the blue, again, you've got the two exceptional lines there, where we're talking about the sales of the two brands. And we've got, a £375,000 profit from the sale of our share of the Twisted Sister brand. We only owned 55% of that, so there was an independent owner. And then a profit of £768,000 on the Real Shaving. And Pippa talked a lot about the brand and our ability to grow brands and create brands. And I think this illustrates the value that's in those brands. There is inherent value in some of these brands we're putting to market, and there are people out there who want to do that, to acquire those brands once we've got them. And I think, again, a phrase Pippa used, incubators, we see ourselves as taking maybe a new concept and into the market, which the Curl company is. It's effectively taken something where we saw a trend and we developed and launched and identified and got that product listed with customers. Or something like AMI, which was a small brand in the marketplace that needed our help to take it to the next stage, and we were able to provide that and take it to the next stage. So there's lots of opportunities in there to create value for ourselves as shareholders in terms of building brands for the future. In fact, when we look at the sale of the Real Shaving Company in the prospectus we put out there, we were actually, impact on profit came out as 0 on those numbers, and it wasn't a particularly, I didn't create that, but that's the way it came out. So we're actually investing and building brands, and the rest of the business, the private label, the contract part of the business, enables us to do that, to invest in our brands. We put on there the EBITDA. I know that's important in the purple, but it just gives you an idea of EBITDA. And the green line, is looking at the net profit as a percentage of sales. So that's looking at the scale on the right-hand side. So we're back at 2012. We're looking at a return on sales of 1.4%. 2016, the year in 2016, it had grown to 2.7%. But again, the 6 months up to September has shown that jump to 4.3%. So that, again, giving us that critical mass, buying that business, giving us access to manufacturing capability we didn't have before, controlling the costs with the centralised costs, has enabled us to take a bit of a leap forward in terms of the return on the sales. I put this in because, again, a key measure from looking at how we're performing is return on capital employed. And again, we've got a point where we've got net assets back in 2012 of 4.1 million. Those have grown by 76% when we get to 2012 up to £7 million. We've invested as we've grown the business in working capital in plant and equipment, and that's the reason for the growth. So the profits have been reinvested in the business over that period. The green line then obviously shows our return on capital employed, and you can see that over that period has grown by 195%. So again, shareholder return. Now, that capital employed figure, I've kept in the exceptional profit because that is part of our investment and part of our business and part of the profit. It is a return on the investment we've made in that business. So that is an absolute return on capital employed. Back to, we virtually eradicated borrowings last year, but then we've got invested in the Broadoak business. At September, our borrowings were at £1 million. They were virtually 0 at March 2016. But that's part of the investment in the stock and debtors and the trade in getting that Broadoak business. So we have got a little bit more borrowings in there, but we're generating cash out of the profit. We'd like to think that we can manage. That should be the peak of where we are in terms of borrowings on the current shape of the business. And again, that gearing ratio at September is a relatively modest 13%, which gives us a bit of flexibility to do things in terms of other acquisitions, if there's anything out there that is attractive to us, continue with our organic growth, amongst other things. I'm trying here just to pick some ratios over that 5-year period from companies that are in our sector who we come across as competitors. Now, they're not directly comparable because we've got PZ Cussons up there with a turnover of 821 million in the year to March 16. But it just gives you a bit of a flavour. I want to look at revenue, where we're looking at a revenue growth for Creightons. It's 30%, and no one else has achieved that in that competitor group in there. And you look at somewhere like McBride's, who are very reliant on the private label sector, where they've seen a decline in turnover over that period. And even PZ Cussons, who've made significant acquisitions over that period in brands, etc., have seen their total turnover. The retained profit, just jumping down a bit, again, We talked about the retained profit there. We had 0.2 million. It was 1.3 million including the sale of Real Shave for ourselves, a 6.3% return, maybe a bit exaggerated. And then, but all of the others there, you can see where they are. Cussons is the only one that's doing a better return. Certainly when we include our September figures, the underlying profit as a percentage of sales is significantly better than most of those competitors set. Earnings per share obviously depends on shares and the number of shares in issue, but the PE ratio, again, this is extracted, these figures, most of these figures are extracted from the stock exchange website. So if you, I'll do an E and OE on the on the figures, and I'll explain that in a minute. But you're looking at a PE ratio when we announced our results back in June of 8.2, and then you're looking at somewhere like you said, Cussons up at 20 times. Obviously, since then the share price has moved and our profits have moved up to September, so there'll be there's a bit of water under the bridge since those figures were published. Dividends, and this is where I had the E and OE. It has a 0.1 for Creightons in 2016, and the figures I extracted, and that is 0. And those of you who are shareholders will know that. So we have not paid a dividend, but just looking across there, Cussons have consistently paid dividends over the period of 2.3 to 2.1% as a yield. Swallowfield had quite a healthy dividend yield a few years ago, but you can see their dividend cover was a -0.8 because they had massive losses later on in the year. They've now gone back to paying a dividend in this last year after recovering from those losses. We've consistently achieved a profit over that period. The balance sheet, I've talked about the net assets and the movement. I've talked a little bit about the gearing, negligible at March, up to 13% by September, and just a few benchmarks in there. You know, we've got McBride's up at 132%, but again, that's because of their financial problems. And then the return on capital employed, where we have moved forward significantly. We're looking at 18% there, 14, 15, 14. You know, where we'll come at the end of this year, we'd like to think we're up at those sort of high teen percentages without asset sales by the, or mid-teen percentages, sorry, high teen percentages by the end of the year. So that gives you a bit of a flavour for where we've come over the 5 years, and gives us a bit of a flavour of how we are against our competitor set. If I hand back to Pippa, if you can.
So just a very brief conclusion, so we leave enough time for some questions. We wanted to give you an insight into what is driving our business for the future and the kind of things that we're focusing on. Brand acquisitions and licenses and developing our branded side of the business, definitely wanting to grow it organically, but if we see anything out there that is of interesting in terms of adding to our branded portfolio, particularly if it took us into a sector that we weren't in, or a distribution channel, or a part of the world, that would be very interesting to us. We would like to think over the next few years we could double our sales turnover. I think that's definitely an aspiration that we have. Definitely extend our global markets. We've definitely got our sights on Germany and the USA. We have entered the German market. We have successfully traded in the USA historically with Twisted Sister and the Real Shave Company. So it's now just finding the right brand to take us back into that market, which hopefully the Kill Company might be. Developing the premium sector, definitely a priority for us in terms of our own brands. We have aspirations to relaunch the Potter&Moore brand as a brand name. And of course, capitalise on the skill set that we've got with our people and the skills within our business to help deliver that growth in our sales teams, marketing teams, purchasing, R&D, and manufacturing. So I just wanted to give you kind of a top-line insight as to the kind of things we're focusing on and what drives us every day in terms of moving the business forward. So thank you very much. That comes to the end of our presentation. We've got a panel of our team here who Bernard introduced earlier, so if you have any questions, we are here. So
the acquisition of Broadoak, you mentioned you know, that you could benefit from the raw materials being common suppliers. To what extent have you managed to root costs out of the present business?
What we did specifically on that, we're all very busy people. We actually brought a consultant in because it wasn't quite as easy just to say X and X is comparable because of all the technical names. So we got a technical consultant in to start looking at the actual chemical formulations, look at which items were common and look at buying power. We've identified so far about £70,000 and we're still working through in terms of rationalising supply base and bringing that back. So there is an ongoing project there to margin improve as we rationalise that. Less on the packaging side because that's very much brand specific or product specific. So we have been able to leverage some benefits where, for example, Pippa talked about tubes earlier on. We have a strong tube buying relationship. So we have been able to, for this season coming, use that. Last year we were a bit stuck with the supply base we had because we had to get the supply chain fired up quickly. So now we're starting to see benefit where we can move supply to our preferred tube suppliers where we've got price
I think with regard to
advantage.
components, and I appreciate your question was about raw materials, but on componentry, we definitely brought a skill set to the Broadoak business. So we've definitely driven gains in componentry purchasing into Broadoak. I mean, it was quite shocking what they were buying some of those things for. So there was definitely some low-hanging fruit there to be had in terms of improving what they were doing in terms of componentry and margin. So not just in terms of raw materials, but there have been some componentry advantages as well.
So, related question, the raw materials, you're buying them in dollars or euros, and what's going to be the impact of sterling
we have faced an impact on the business as a whole is a net seller of dollars. Some of those trading relationships we have aboard are dollar denominated sales and a net spender of euros. So the euros had a more significant impact on the business in terms of cost on our business. And I talked to tubes earlier and that's one of the areas. On the selling side, although the dollar has an impact, we've also had a gain on the sales value side. So there's a bit of a natural hedge there where the two currencies have moved at the moment. But looking at there has been an indirect impact on raw material supplies because a lot of those come in from Germany ultimately or are sourced in, like palm oil is a significant base raw material which is priced in dollars. And there has been increases in those coming through in the pipeline.
Will you be able to maintain your gross margin?
I think overall we'll be able to maintain it with the offset of the savings we'll make, offsetting some of those costs we're incurring. Some of them, the palm oil, are not dollar related; they're commodity related in the market as a whole. So that's had an impact outside the currency impact. But the post-Brexit currency thing hasn't been as bad as it could have been for us because of because we're a natural seller of dollars.
We've been looking at resourcing where possible as well,
Yeah.
So with componentry as well, it's easier to do it. So we've looked at alternative sources for components as well to compensate for that as well. So the team's working on that as well.
Slightly going on from that, the operating margin has spiked up over 4 or 5 years from 1 point something to 6 point something %. Do you see that as sustainable? Is that the right level going forward?
Obviously that 6% includes the exceptional item, but the operating margin at the half year stage, I think we'd like to believe we can sustain that level of operating margin. We have aspiration to go further, and we're working on getting above 5% on that. But at the moment we're around. It's fair to say that the 4% figure should be.
We want to drive the business into the more premium end of the market as well, and we've been helped by that in the acquisition of Broadoak, whose customers were at the premium end, and we're hopefully going to improve quite a bit on on the sales to those customers. We've certainly kept them. Sally and our team have done a great job in that.
In the first half of this year, you had quite a lot of cash outflow on the working capital side.
Yeah.
Presumably that's related to the acquisition.
It
Can you explain
primarily
why
is.
that is, and
Well,
is that done, or is there still
Yes,
cash?
I think the answer to that is it's primarily to do with the acquisition. As you can imagine, we inherited a brand that had been in a business. We bought the assets of a business that had been in financial difficulty for a number of months. They'd sold everything they could convert. They had a supply chain. We found out about it because customers and suppliers were starting to make noises about not supplying them, and customers were starting to look to move their business elsewhere. So they had been in financial difficulty for a long time. They'd exhausted any saleable stock, and any little bits that were left, the administrator sold very quickly. So we inherited a business that had a lot of stock on the books, and not a lot of that had a lot of value, frankly. So we had to very quickly turn that supply chain on, get those suppliers back into the business, get customers' orders met as quickly as possible. So we've had a significant increase as we've, if you like, normalised the working capital with that business. For the current level of business we've got now, that's as far as it will go. It shouldn't go any further than the September figures. There's also been an element of organic growth within the business, the existing business, but to maintain the business levels, we shouldn't need to make that step again.
I mean, on your branded business, in terms of marketing, how can you compete against the juggernauts within the sector, like the Unilevers and what have you?
Good question.
It's an excellent question. I think innovation in this market, particularly female consumers, are very open to buying new products. And if you have the right product at the right price, that's a performance product, we know it can sell. So what you'll see is very heavy advertising by the juggernauts of the industry, but actually they're advertising to protect market share. There are people like us that are coming up all the time that are taking new customers. Just for example, I'll give you an interesting piece of information. So we launched Creightons hair care, which is our pound lines, into Tesco. Took a lot of convincing, about a 2-year period. They didn't want people down trading from John Frieda that sells at £4.99. We kept trying to prove to them that actually it would bring new customers, and those customers are walking out the door and going to Poundland, and actually you won't trade down from John Frieda, you'll keep those customers. After 6 weeks of sales, they produced some Dunnhumby data that proved that our brand was bringing 77% new customers into the hair care category. There was no trading down from John Frieda, and fortunately, thank goodness, what I was trying to convince them that actually they wouldn't try was true. So Tesco are thrilled to bits, because guess what? They've stopped hemorrhaging customers out to Poundland because they're now filling a position with a quality product. So in terms of answering your question about advertising, if you have the right product in the right shelf space with the right retailer at the right price, you can sell product. You can shift product off the shelf. What you find with those juggernauts is they're advertising, and they're having to advertise all the time to protect market share and to protect market share. There are lots of brands like us that are, if you do innovation and great looking product, you can get the consumer's attention. So I don't know if that fully answers the question for you, but that's my answer.
How much of your total revenues are international, and how has it changed over the last 2-3 years?
Our export currently accounts for about 10 to 11% of our total revenue, and that has grown probably from a position of barely anything over the past 4 to 5 years.
Do you have any aspiration to where that's going to be in 5 years' time? Is that part of the big plan? Or?
Yes.
Yeah, we would certainly expect, if we double the turnover in 5 years' time, we'd expect the export to be 10% of that, at least, probably 15 in 5 years' time. The thing is, we've been in and out of the export market. The two brands we've sold, or three actually, were all export. So we were doing $2.5 million, $3 million in the United States probably 4 or 5 years ago. And we sold those brands. We got good money for them. We felt we had reached the point of diminishing returns in our abilities to support the US market and to fight with the retailers over there. So it suited us to sell it. But we have been up there before with export in terms of more than 10%. But I suspect that we hope to grow the business in a balanced way, keep all the ratios the same, so we get to 60 million. The export will certainly be at least 10%. Nick, would you like to take over? Because I know you're going to say 20%. Go ahead.
I'd like to say 50%, to be perfectly honest. I mean, I said this last year as a presentation we did then, that I expect to be able to fill the capacity that we've got because we've just got the global territory to go for. We do very well in the UK, but we've got so many markets. We're currently in 36. Just for the next 12 months alone, there's another 14 countries I expect to bring on board in that time. And there's some giants out there that we've not actually brought on yet. We're talking some of the Middle Eastern countries. We're talking the US, Canada. There's some very big markets that now we've become established, we've become an international brand. We can only grow. So yes, I'll disagree with Bernard's figures there, and I would say there'd be a lot larger.
That's what's so good about Nick, I love it.
Can you do that from the existing capacity?
Do you mean in terms of manufacturing capacity?
Oh
Yes,
yeah.
Absolutely.
We could. No question about
No
that.
questions on capacity.
Broadoak has given us, we've got assets there that gives a lot more capabilities and capacity than we had previously.
How have you managed to avoid paying any corporation tax for the last 2 years despite being profitable? And can I get some advice from you?
At the time, going back many years, before Creightons bought Potter&Moore, Creightons had significant tax losses that had been incurred way back in pre-2000.
I think I was actually doing Paul's job at that time, and we had significant tax losses back 10, 12 years ago as a consequence of the programme that the then board had of acquisitions which didn't pay off, one of which ironically was Potter&Moore. But it then left us with a significant tax loss which we have been able to take advantage of over the last few years. Unfortunately, the business is doing so well that they've eaten through it now, so we will probably be paying tax in the next year, I think.
We're happy. As responsible manufacturers, we feel happy to pay some corporation
yes,
tax.
I agree with you.
Do you reckon you'll be paying the full 18%?
This year we won't be, but after this year we will.
It seems though the unique part about your business is you're managing other people's brands, which I really get, and I think it's a really good value-added service. Could you do that for other brands where other people are manufacturing and to do the low margin stuff, and you just take some nice high margin for managing somebody else's?
We'd like to manoeuvre into that position, but we haven't managed to achieve it yet, and we're always feel that we can do the lower margins better than most. We're actually quite good at making a profit on low margin brands. We can't compete with the Chinese up until now, or the Eastern Europeans for that matter. But with the dollar changes in the currency, we're getting a lot more attention. For example, Pippa, can we mention Grace Cole as a customer of ours?
Yeah.
So, I mean, that's worth about $1 million a year. It's mid-market position, mass. They would normally bring it in from China. They've decided to, that it's too expensive. So in the last year, Sally's team has taken that on board. We had a few difficulties in trying to get the margins, first of all. In fact, we told them to take the business. We can't do it, and they came back and said we'll pay the price. So Sally's got £1 million worth of business there with reasonable margin. Not great. I'm not saying it's stupendous, but we can do as good with that as we can. So that's an example of one customer.
We also offer the lead time as well, because if they're buying in from the Far East, obviously there's a longer lead time. So if a product's successful, the turnaround then is a lot longer. So with UK manufacture, we can turn it around really quickly, and that's one of our key USPs is our flexibility as a manufacturer. So we can react to those spikes in demand from our customers.
We're very sort of tactile in the marketplace. We get the customer pain, and we try to understand it and cure it.
I think to answer the question about could we manage other people's brands though, because I think that was your original question. I think yes we could, but that takes us more into the consultancy arena and a completely different set of competitors. I think the USP that we bring is we have an R&D staff, I have a design team, I have a packaging development team, and I can manufacture it. So actually it's more added value in terms of what we can do. Could we bolt on managing other people's brands? I think I'd want to make it as well. So I don't know, maybe that could be a way forward.
Can I ask about, do you have any online strategy, or you rely on somebody else?
We do run our own online website. It doesn't sell a lot. It's hard to sell big litre bottles or 250 mils and send it to the post to individual customers and make money. It doesn't really work, but it may do in the future.
I think as we move into more premium products, that will come into play a lot more. I think if you look at the most successful .coms in the UK, feel unique, look fantastic. They're succeeding with very small high-end cosmetic products that are very high value, and they're succeeding with fragrance and high-end skincare. I think as we move our brands into the more premium sector, I think we definitely will have an opportunity to do more successful business in .com. I think in the mass market where we're at the moment, as Bernard said, it's very difficult to make good margin on shipping product that is quite low value. Mm-hmm. And when I say low value, that can be anything from £1 to $9.99, but as soon as you start getting over that, so the key to it is small and expensive, then it works.
Well, one of the bits of business that Sally has won, you might like to talk about that, Sally, is the Hut Group. They're big in online. They've got lots
They own
and lots of
lookfantastic.com, yeah.
online brands, and we'd rather actually service that with our expertise in manufacturing.
Yeah.
Yep. So we're projecting to do probably 1 million with
Yeah.
Hut Group.
So they're
and
looking to acquire lots of brands as a business, so we're in a really good position with the Hut Group now to work with them in terms of manufacture of those.
I'm switching the emphasis of your question, really, but the answer is no, we're not good online.
Tremendous. Thank you very, very much indeed for an excellent presentation, and it's great to have you all here to get the perspective of everyone. So thank you very much indeed.
Thank you.